Welcome to the Capital Spreads Weekly Update. A very happy new year to everyone. And today is Wednesday the 5th of January 2011. And the year started off as really December had finished with a very good strong start yesterday. Obviously the UK markets were closed on Monday for the bank holiday. But in Europe we saw a very strong showing of PMI numbers from manufacturing PMI surveys, and that really gave a good boost to global equity markets. And so when the FTSE opened yesterday, we smashed through 6,000, but we've just seen a little bit of profit taking creep in today, and we've seen some concern re-emerge about the Eurozone, as it would appear that obviously the PMI surveys for the sort of peripheral states within the Eurozone were very poor, whereas of course the likes of sort of Germany have been incredibly strong. So once again we see this 6,000 level in the FTSE 100 providing resistance. We're yet to really have a sort of confirmed move above it and closure above 6,000. So a little bit of profit taking at the moment. We've also seen, in particular in the UK, just a little bit of concern surrounding the retail sector, who obviously suffered a great deal from the disruption to sales with the bad weather last year. And that sector's a little bit weaker, and we also had some slightly worse than expected PMI construction data from the UK. So a little bit of profit taking. We're down about 1.5% on the week. That's obviously taking last Friday's close, where we did actually close above 6,000. So the current situation in the FTSE around 59.70. The Dow, we're looking at 11,600, and for euro dollar, which has had a little bit of strength up to now, suffered further resistance again at 1.34. We're around 132.25. Cables around 155.75, and gold as well had that good run up above 1,400 in the run up to the new year. But significant profit taking yesterday has dragged us back down. We're around 1380 for gold, and that's really on the back of really what's been profit taking across risky assets. So we've seen a retracement in commodity prices, equity markets, and of course gold as well. So I've got a little chart here of the FTSE as things currently stand, and what you'll see is that since the run higher last June, on two occasions the FTSE has, when it's closed significantly below its 20-day moving average, it has continued a little bit lower, and we saw a correction of around 5 to 6% in June, July. We then saw a correction of around 6 to 7% in November, and we're just faltering at the 6,000 level now. So is this a precursor to another correction perhaps of around maybe 6 to 7% possibly? So we've got to keep an eye out for that 20-day moving average. If we have a significant fall and a close below that 20-day moving average, we could see further weakness. So how are clients playing the FTSE at the moment? Well, they've been very short the FTSE, and they continue to remain short. But however, when you look at US indices, actually they're rather flat. So they're expecting the FTSE to come back, maybe retrace further than US indices. On the currency front, clients are long sterling and short the euro, so certainly there's a little bit of negative sentiment towards the euro at the moment. Clients just shifting their positions to negative for the euro. And of course this big retracement in oil and gold has meant that clients have increased their long positions for crude oil and for gold. So for the rest of this week, we've got the biggest figure of this week and possibly this month actually, the non-farm payrolls on Friday. So looking ahead to that, last non-farm payroll in December we saw an increase of only 39,000. That was really bad, and it did hit the markets quite significantly. But this time we're expecting a rise of 140,000. So ranges of between 100,000 to up to 200,000. So anything lower than that could really probably put a cap on the markets, and we could see further profit taking. But of course, significantly, we'll also be focusing on the unemployment rate in the US, which is expected to go down a notch from 9.8% to 9.7%. But of course, that's still the 17th month in a row above 9.5%. So quite significant. Unemployment still very high in the US. So the theme of this week, well, what does the rest of January hold for us? We had a good start. We're just topped. Looks like a bit toppy at the moment. What's happened in the past in January? Well, it's a very sort of mixed month for the FTSE. In the last 26 years, we've seen 14 rises and 12 declines. On average, they're around 4%. So often we see the start to the year, it would seem, is a little bit tentative, especially if you've seen a good run higher in the December, the month before, which we certainly have. So that would seem to be the case certainly now, but of course it's very early days in January. That's it for this week. As ever, do give us feedback, media@capitalspreads.com.